Welcome to the deep dive. Today, we're going deep into Indian finance, and specifically, we're looking at how Nippon Life India Asset Management is doing. You gave us a ton of stuff to look at: press releases, financial statements, even an investor call recording. So we're ready to really break it down.
Yeah, it's really interesting to see how this company's working. And we're not just going to look at the numbers themselves. We're
Right.
going to see what they tell us about their strategies and how they fit into what's happening in India's financial scene. And in the end, we want to figure out what it all means for you.
Okay, let's get into it. The first thing, Nippon Life India just came out with their Q3 FY25 results, and there's a lot to go through. One thing that jumps out is how much their assets under management, or AUM, has grown. It's up a huge 51% from last year. What does that tell us about the company?
Well, that kind of growth in AUM, basically the total value of all the investments they manage, it means a few things. First, they're obviously doing something right to attract and keep investors. And with that growth, they're on track to maybe even overtake some of their biggest competitors in the next few years.
So maybe that means they're coming up with new products and maybe even lower fees for investors like you who are listening. All right. So they're getting investors. But are they making money? Are they just chasing growth no matter what?
Not at all. Their profit after tax is also up. And so is their operating profit. Actually, they've earned the title of fastest growing asset management company among the big names in India.
That's pretty impressive. But what's driving those profits? Is it coming from different kinds of investors, or are they relying on just a few big fish?
It's actually a pretty interesting trend. Their systematic investment flows are doing really well,
Yeah.
especially through SIPs. You know about those, right? Systematic investment plans. You put in a set amount regularly, like a savings plan for your investments. Well, Nippon Life is seeing a big jump in these SIPs, which means more and more everyday people are choosing this way to invest.
So it sounds like they're getting a wide range of investors, not just the big institutions. That's got to be good for their stability in the long run, right?
Absolutely. This growth in SIPs shows something bigger that's happening in India. It's called the financialization of savings. More and more people are moving away from traditional ways of saving, and they're using financial things like mutual funds to grow their money. And Nippon Life seems to be really good at taking advantage of this change.
All right, so they're doing well with mutual funds, but what about their other stuff? They've also been making moves with ETFs, haven't they?
Yeah, they've done pretty well with exchange-traded funds, or ETFs. Actually, they have the most ETF volume on both of the main Indian stock exchanges, the National Stock Exchange and the Bombay Stock Exchange.
Wow, that's quite a jump in ETF volume. What's behind that success? Is it a particular kind of ETF that's bringing in investors?
Seems like their success with ETFs is showing a couple things. They were pretty early to get into the ETF game, which gave them an advantage in building up liquidity. That's really important for ETF investors. They've also got a wide range of ETF products. They're not just doing plain index funds. They're also doing thematic ETFs, sector-specific ETFs, and even international ETFs.
So they've got something for everyone then, from the people who just want broad market exposure to those looking for more focused investments. It's like they're making a one-stop shop for ETF investors.
That's a good way to put it. But it's important to remember they're not ignoring their active management strategies either. They've got a diverse mix of 43 actively managed schemes. They're showing they're committed to both active and passive investing. They're not putting all their eggs in one basket.
Right. They're covering their bases and catering to a wider group of investors. Now, they're not just focused on India, are they? Are also expanding internationally.
Yeah, they're definitely trying to attract international investors. They're managing a couple of UCITS funds. Those are essentially investment funds that are regulated, and you can buy them all across the European Union.
Ah, UCITS funds. Those are popular with European investors who want regulated and transparent investments. So they're tapping into the European market with those. What else are they doing internationally?
They're also working with their parent company, Nippon Life Insurance, to get into their global networks and distribution channels. They've mentioned partnerships in Japan, Singapore, and even Dubai.
Wow. So they're really building a global presence. It's like they're planting seeds all over the world, hoping to grow a diverse and strong base of investors. That's pretty ambitious.
Ambition is definitely key in a market this competitive. But we also need to think about some potential problems they might face. Like, there's just the natural ups and downs of the market and more competition from other asset management companies. both in India and internationally.
Yeah, competition is something to watch, especially as more players enter the Indian market. And we can't forget about that regulatory uncertainty that's hanging over them. Remember that show Cause Notice they got from the Securities and Exchange Board of India back in September? We don't want to downplay that.
For sure. While the company says they've followed all the rules, that regulatory scrutiny is something to watch for. We don't know how that investigation is going to turn out.
And another thing that caught my eye was that they decided to cut commissions on some of their biggest mutual fund schemes. Could this be a sign of things to come? Are they focusing on long-term profits over quick wins? It's possible. It might mean they're focusing on sustainable profitability. But we should also remember they're doing this in a market where investors are really pushing for lower fees.
Right, so it could be them trying to stay ahead of the game and attract investors who are watching their costs. It'll be interesting to see how this affects their overall yield and what it means for investors down the road. Okay, before we move on, let's take a closer look at their finances, starting with their revenue. Their Q3 FY25 revenue came in at a pretty healthy INR 5.88 billion.
Yeah, that's a big 39% jump from the same time last year. And it's especially impressive when you think about how their operating expenses also went up during that time.
So how did they manage to boost their profits, even with those rising expenses? Did they do any cost cutting or find ways to be more efficient? Well, if we look at the investor call recording, they talk about trying to streamline their operations and using technology to be more efficient. Seems like their strategic focus on higher yield products and services is also playing a key role. They're making choices about where to invest and how to manage expenses, which makes it seem like they have a sustainable approach to creating value.
That's a good sign, right? Shows they're not just blindly chasing growth, they're focused on building a business that's both sustainable and profitable. Now, what about their profit after tax? That's the bottom line for investors, isn't it?
You got it. And they've delivered there too. Their profit after tax for Q3 FY25 hit INR 2.95 billion.
Okay, so that's a solid increase compared to last year, but it did drop a bit compared to last quarter. Anything in particular that caused that quarter-over-quarter decline?
Well, if we look closely at their financial statements, it looks like a big part of that dip is because of changes in their other income. It was way lower this quarter. And that seems to be mainly because of how market movements impacted their investment book.
So it sounds like short-term market swings might be making things look a little worse than they are. But their core business is still doing well. What impresses you most about how they've managed their finances?
I think what's really impressive is their commitment to keeping growth and profitability balanced. They're not just chasing AUM at any cost.
Yeah.
They're making choices about where to invest and how to control their expenses. This seems like a sustainable way to create value for both the company and its investors.
And speaking of investors, they've done pretty well by their shareholders. Their history of paying dividends is pretty remarkable. Can you tell us more about that?
Yeah, their track record of sharing profits with shareholders is definitely something to notice. For example, in FY24, they gave out almost 99% of their standalone earnings to shareholders, including a total dividend of INR 16.51 per share.
That's a pretty generous payout. It shows they're serious about rewarding the people who invest in them. It's like they're saying, hey, we're all in this together. When we succeed, you succeed.
Definitely sends a positive message to investors. It shows they're confident they can make consistent profits and share those profits with their shareholders.
Now, let's switch gears a bit and talk about some of their strategic moves. They've been pretty busy expanding their reach and what they can do. What are some of the things they've done that stand out to you?
Well, like we talked about earlier, them getting into Gift City, that special economic zone made to get foreign investment, that's definitely a big move. They set up a branch there and got a fund management entity license, so they can manage funds that are based in Gift City.
Imagine a futuristic city made just for finance, attracting investors from all over the world. That's Gift City. And Nippon Life is right there in the middle of it. They're definitely aiming to be a global player.
It's a strategic move to position themselves as a gateway for foreign investors who want to get into the Indian market. And they just started their first Gift City fund, the Nippon India Large Cap Fund Gift. It's a feeder fund that invests in their existing large cap mutual fund in India.
So they're basically giving international investors a new way to access their already proven Indian investment strategies. It's a smart way to use what they're already good at and expand their reach.
Exactly. And it taps into the growing interest from foreign investors who want to be part of India's growth story.
They've also been pretty innovative when it comes to technology. Their digital stuff, especially that voice-enabled trading feature, is impressive. It's like they're making the future of finance a reality.
It definitely feels that way. That feature is meant to make investing easier and more convenient for people who are comfortable with technology. And it fits with their overall focus on using technology to improve their services and reach a wider audience.
They're not just using technology for the sake of it. They're using it to solve real problems and meet the changing needs of investors. It's a smart move. And we can't forget their efforts to reach investors in Tier 2 and Tier 3 cities, those B30 locations they talk about. It's like they're making sure everyone has access to financial tools and opportunities. It's not just about the big cities anymore.
Yeah, focusing on financial inclusion is a big part of their long-term growth plan. They see the potential in these markets that haven't been served well,
Mhm.
and they're using technology and new distribution models to reach those investors.
All right, before we wrap up this part of our deep dive, I want to talk about something that's more and more important to investors these days: their commitment to ESG principles. This seems to be a big part of who they are, wouldn't you say?
Absolutely. It's clear from their reports and what they say publicly that they're not just talking about ESG. They're making it part of how they work, how they invest, and their company culture.
They even signed on to the UN Principles for Responsible Investment back in 2021, which is a pretty big deal. Shows they're serious about making their business align with global sustainability goals.
Exactly. And they've got some very specific initiatives in place, focusing on things like climate action, diversity and inclusion, and ethical governance.
They've also been talking about investing responsibly. What does that look like in practice?
They're increasingly looking at ESG factors when they decide whether to invest in a company. They look at things like the company's environmental impact, how socially responsible they are, and how their governance is set up, all before they put money in.
So it's not just about profits for them. They're thinking about how their investments impact the world.
Exactly. And they're working with companies to encourage them to be more sustainable. They're not just passive investors. They're using their influence to make positive change.
It's good to see a company using its resources and power to make a difference in the world. They're definitely walking the talk when it comes to ESG. Now, before we go on to part two, I want to talk about the people behind all of this. What's their management team like? Are they experienced professionals who really understand the Indian market?
They definitely have a lot of experience in finance. For example, their executive director and CEO, Sandeep Sikka, has been in asset management for over 28 years. And he's even held leadership positions at AMFI. That's the Association of Mutual Funds in India.
So they've got a leader who knows the industry inside and out. What about their board of directors? Are they actively involved in guiding the company?
Their board is very diverse and accomplished. They've got people with a wide range of expertise. There are former government officials, financial experts, independent advisors, and people from Nippon Life Insurance, their parent company.
Sounds like they've got a strong leadership team and a board that's dedicated to good governance. That's definitely a plus. Now, before we finish up part one, I think it's important to remember that there are always risks and challenges for any company working in a complex market like India's financial sector. What are some things investors should be aware of?
You're absolutely right. No company is completely safe from risk, and it's smart to think about both the opportunities and the potential problems Nippon Life India might face.
Exactly. And one risk we've already touched on is that ongoing investigation from SEBI. That show cause notice from September could mean penalties or changes to how they operate.
It could. And even though the company says they followed all the rules, we still don't know how that investigation will end. Investors should definitely keep an eye on this.
Another potential challenge is the growing competition in asset management. Lots of companies are fighting for market share, both from India and other countries. How do you see this competition playing out?
The competition's definitely getting tougher, especially in areas like ETFs, where the profit margins can be small. Nippon Life India will have to keep innovating and providing value to stay ahead. They'll need to use their brand recognition, their network, and their deep understanding of the Indian market to hoard onto their share of the market.
And then there's just the natural ups and downs of the market. Like we saw this quarter, things outside their control can really impact even the best-run companies. How can investors protect themselves from this kind of risk?
That's a really good point. Investors should always be aware of market risk and how it can affect their investments, no matter the company or the type of asset. Diversifying. That means spreading your investments across different types of assets and even different parts of the world.
Yeah.
That's one way to manage that risk.
All right, welcome back to the deep dive. Let's kind of shift gears a little bit and zoom in on the different pieces of Nippon Life India's business. It seems like they're involved in a lot of different things when it comes to financial products and services.
Yeah, for sure. They've got quite a diverse portfolio. But let's start with the core of what they do, mutual funds. They've got a bunch of different schemes covering pretty much everything, from the basics like equity and fixed income to more specialized funds like, thematic and hybrid funds.
And they're managing a ton of money in these mutual funds.
Right.
Over INR 5.5 trillion, that's a crazy amount of money. What sets them apart from other companies when it comes to mutual funds? What's their secret?
Well, one big thing is that they do both active and passive investing. They're not just focused on one or the other. They want to give investors all kinds of choices so people can pick what fits their needs and how much risk they're okay with.
So it's like they're saying, hey, we've got something for everyone, whether you want to be hands-on with actively managed funds or you're more laid back and want low-cost ETFs that just track the index.
Exactly. It's all about choices and being flexible. On the active management side, they've got a really solid track record, and their investment team is very experienced. They're known for being thorough in their research, focused on managing risk, and disciplined when they put together a portfolio.
So they're not just guessing, they're doing their research and making smart choices. And for people who want a more hands-off approach, they've got a strong ETF business.
Right. They've been smart about how they've built that ETF business,
Yeah.
and they're now one of the leaders in the Indian market. They're managing over INR 1.5 trillion in just ETF assets.
That's a lot of money. What's
Yeah.
behind that success? Is it just luck, or is there something more to it?
Well, being one of the first to get into ETFs definitely helped. But they've also really focused on building liquidity and keeping their tracking error low. Those are really important things for people who invest in ETFs.
Can you explain that a little more? What do you mean by tracking error? And why is liquidity so important when it comes to ETFs?
Sure. Tracking error is basically how closely an ETF follows the index it's supposed to be tracking. The lower the tracking error, the better the ETF is at copying the index's performance. And liquidity is how easily you can buy or sell an ETF without messing up the price. If an ETF has high liquidity, you can trade it quickly without worrying about the price going crazy.
So it's all about making things predictable and making sure investors can easily get in and out of their positions. It makes sense why those things would matter to ETF investors.
Yeah, exactly. And it seems like Nippon Life is doing well in both of those areas. They've also been smart about offering a variety of ETFs. They're not just doing those basic index funds. They've got ETFs that focus on specific themes or sectors, and even international ETFs that give people access to markets outside of India.
It's like they've got a whole supermarket of ETFs, something for every taste. Okay, let's move on from mutual funds and ETFs and talk about some of their other stuff. They're also getting into alternative investments, right?
Yeah, they are. They've got a subsidiary called Nippon India Alternative Investments, NIAF for short. It manages all sorts of alternative investment funds, or AIFs, as they're often called.
AIFs. Those sound a bit more, shall we say, exotic than your average mutual fund. What are those all about?
Yeah, you could say that. AIFs are usually set up as private funds, and they're for high net worth individuals, big institutions, and family offices. They're a way for sophisticated investors to get into opportunities you can't find in regular mutual funds.
Okay, so it's a bit more of an exclusive club. What kinds of things do these AIFs invest in? Can you give us some examples?
They often put money into things like real estate, private equity, venture capital, and even companies that are in trouble. It's like going beyond the stock market and looking at investments that aren't so traditional.
Sounds a bit like the Wild West of investing. What kinds of AIFs does Nippon Life India actually offer? What's their plan in this area?
It seems like they're focusing on a few key things within these alternative investments. They've got AIFs that focus on public equity, real estate credit, performing credit, and even a fund for tech venture capital.
Tech venture capital, that's interesting. Are they putting money into Indian startups?
Yeah, they are. This fund is specifically for investing in young and growing startups in India's tech sector. They're basically betting on the future of India's digital economy.
So they're trying to catch the next wave of big tech companies. That's pretty bold. What about their other AIFs? How are those doing? I guess it's harder to see how well they're doing compared to mutual funds that are publicly traded.
That's true. AIFs aren't on the stock market, and their value can be harder to figure out. It's not as easy as checking a mutual fund's performance in the newspaper. But they've been able to raise a good amount of money for their AIFs, and they're actively using that money to invest.
So it's a bit more behind the scenes than the mutual fund world, but it sounds like they're making strategic moves and trying to take advantage of opportunities with these AIFs.
So,
Now, let's talk about their international plans. We talked about their UCITES funds, but what else are they doing to get investors from outside India?
well, as we said before, they're working with their parent company, Nippon Life Insurance, to use their global connections and distribution channels. They've talked about partnerships in Japan, Singapore, and Dubai, trying to reach a bigger group of international investors.
So it's like they're building a bridge between the Indian market and the rest of the world. Smart strategy, but it also comes with some challenges. What are some of the obstacles they might face trying to get those international investors on board?
One of the toughest things for any Indian asset manager going global is getting those foreign investors to trust them. They have to prove they've got a good track record, strong governance, and a deep understanding of how global markets work. Only then will those international investors feel okay giving them their money.
It's like trying to get into a really exclusive club. You need the right credentials and a good story to even get in the door. And once they're in, they'll have to deal with different rules in different countries, currency changes, and cultural differences.
You got it. Going international is never easy. It takes careful planning, being able to adjust, and being willing to learn and work in different ways.
Now, they were also smart to set up shop in Gift City, that special economic zone we talked about. How does that fit into their overall plan for growth?
Being in Gift City is a big part of how they're trying to attract those foreign investors. They got a fund management entity license there, so they can manage funds that are based in Gift City. This makes it easier for foreign investors who might feel better investing through a Gift City entity.
So they're making a more comfortable environment for foreign investors, making it easier for them to be a part of the Indian market.
Exactly. And remember that feeder fund they launched, the Nippon India Large Cap Fund Gift. That's another way they're trying to get foreign investors involved. It lets those investors put money into an existing Indian fund, but through a structure they might be more familiar with.
It's all about making things as smooth as possible for foreign investors to get in on the opportunities they see in the Indian market. They're really going all out. Now, before we go to part three, let's step back for a second and think about some of the challenges they might run into in these different parts of their business.
Sure, we have to remember there are always risks and challenges, even for a company as successful as Nippon Life India. For example, in the mutual fund world, they're facing more and more pressure to lower their fees. Investors are becoming more careful about costs, which is squeezing the profits for asset managers.
Yeah, it's a race to the bottom on fees in some parts of the market, and that can make it hard to make money. How are they dealing with this pressure?
They've already made some changes to how they structure their commissions, like we talked about earlier, and they're probably looking for other ways to streamline their operations and cut costs. But they don't want to sacrifice the quality of their products and services.
It's a tough balancing act. They need to keep costs low to stay competitive, but they also need to invest in innovation and good people to stay ahead of the game.
Absolutely. And then there's always competition to think about. More and more companies, both from India and other countries, are getting into the Indian asset management industry. Nippon Life will have to keep adapting and evolving to hold on to their place in this crowded market.
Speaking of the competition, what about their alternative investments business? Are there any unique challenges they're facing there?
Well, alternative investments are naturally riskier than things like stocks and bonds. They often deal with assets that are harder to sell quickly, have longer investment time frames, and use more complicated strategies. So managing risk well is super important here.
And they also need to stay on top of how the regulations are changing, right?
Right. The rules for AIFs are always changing, which makes it hard to keep up with all the requirements. They'll need to have a really solid system for compliance to handle these constant changes.
Sounds like a lot to keep track of. What about their plans to expand internationally? What are some of the potential roadblocks they might hit?
Like we talked about, building trust with foreign investors is key. They'll need to show a good track record and convince those investors that they understand their needs and can deliver consistent returns.
And we can't forget about the complications of working in different regulatory systems and dealing with currency changes.
Definitely things to keep in mind. They'll need to really understand how different markets work and be able to change their strategies depending on where they are.
Sounds like they've got their work cut out for them. But they've shown they're willing to take risks and adapt to changes in the market. It'll be interesting to see how they continue to evolve and what their next steps are. Stay tuned for part three, where we'll explore their long-term plans and figure out what it all means for you, our listener. Okay, we're back for the last part of our deep dive into Nippon Life India Asset Management. We've gone over a lot, their financials, their strategies, all the different parts of their business. But now I want to know what's next for them? What's their big plan for the future?
Well, they've been pretty upfront about what they want to achieve. They want to be the top dog in India's asset management world, and they want to be a known player on the global scene. They're thinking big, and from what we've seen, they've definitely got the energy and the skills to make it happen.
So, world domination is the goal. But seriously, how are they planning to do all this? What are the main parts of their long-term growth strategy?
One big thing is reaching more people within India, especially those in Tier 2 and Tier 3 cities, those B30 locations we mentioned. They see a huge opportunity to offer financial services to people who haven't had access to them before.
It's like they're trying to change what it means to be an investor, making it so anyone can invest no matter where they live or their background. That's a pretty cool goal.
It is, and they're using technology to do it. They're putting a lot of resources into things like digital platforms, data analytics, and new solutions, all to make investing easier, more convenient, and more engaging for a wider range of people. Remember that voice-enabled trading feature we talked about? That's just one example of how they're using technology to make investing more accessible.
It's like they're trying to make investing as simple as ordering takeout or booking a ride. Pretty interesting idea. But technology alone isn't enough, right? They need people on the ground, too.
You're right. Their distribution network is key to their plan. They've got a huge network of mutual fund distributors, banks, national distributors, and other channels. And they're always working to make those relationships stronger and expand their reach through new partnerships.
So it's a two-part plan: new digital stuff and a strong presence on the ground. Like they're building a network of highways and local roads to get to every part of the market. Okay, what about their products? Are they going to come up with any new and interesting stuff to get investors excited?
They're always looking at new product ideas and trying to expand what they offer to meet the changing needs of investors. They've hinted that they might come out with more innovative ETFs, thematic funds, and alternative investment products, all aimed at satisfying different investment styles and risk appetites.
So they're not just sitting back and relaxing. They're constantly coming up with new things and staying ahead of the game. It's like they're running a marathon, but always trying to find ways to get faster and improve their endurance.
That's a great way to put it. And their goals aren't just limited to India. They also want to grow the business overseas and attract more international investors.
We talked about their UCITES funds and their partnerships in other countries, but what's their ultimate vision for international growth? Do they see themselves becoming a global asset management leader?
Well, they've said they want to use their knowledge of the Indian market to attract those foreign investors who are interested in India's growth. But they're also looking at other ways to expand globally. Not just by offering things related to India, they want to have a wider range of international investment products to become a bridge between Indian markets and the rest of the world, connecting investors with opportunities on both sides.
So they're not just selling Indian investments. They want to be a global player in their own right. Pretty ambitious. It'll interesting to see how they pull it off. Now, aside from their financial goals, I'm interested in how committed they are to ESG. How does that fit into their long-term vision? Is it just a trend for them, or is it really part of their company culture?
For them, ESG is definitely not just a fad. It's woven into how they operate, their long-term strategy, and their values. They really believe that doing business sustainably is key to creating value over the long run, and that investing responsibly can make a positive difference in the world.
It's nice to hear that they're not just talking about ESG, but actually doing something about it. They see it as something that sets them apart and a way to build a more sustainable and fair future.
Exactly. They see ESG as a way to match their business goals with the needs of everyone involved, their investors, employees, customers, and the communities where they work. They believe that doing the right thing is also good for business, and they're putting their actions where their words are.
Okay, we've been pretty positive so far, but let's be realistic. There are going to be challenges along the way. What are some of the potential bumps they might hit as they try to reach these ambitious goals?
Well, like we said, the competition in asset management is tough. And it's only getting tougher. New companies are popping up all the time, and the ones already there are stepping up their game. Nippon Life will have to keep innovating, adapting, and finding ways to stand out to stay ahead.
They can't just sit back and relax. They need to keep pushing the limits and finding new ways to create value for investors. Anything else?
Changes in regulations are always a bit of a wild card. Financial services are heavily regulated, and those regulations are always changing. Nippon Life will have to be quick and flexible to keep up.
And then there's the whole global economic situation. Things are pretty shaky right now. Inflation, interest rates going up, and political stuff going on around the world. All of that adds to the uncertainty. How do you think these things will impact their plans?
It's definitely a tricky time to be doing business, but they've shown they can adapt to changing markets and make smart decisions to minimize risks. They'll have to keep being careful and think ahead to manage those risks.
So they've got to be ready for anything. It's like sailing in uncharted waters. They need to be ready for storms, calm seas, and everything in between. Now, looking internally, are there any areas where they might need to get stronger or fix any weaknesses? Every company has areas to improve, right?
Of course, one area they might need to work on is getting and keeping talented people. As they grow and get into new areas, they'll need to attract the best people to drive their innovation and get things done. They'll have to offer competitive pay, a good work environment, and chances for professional growth to keep those talented folks engaged and excited.
It's tough to find good people these days, especially in finance. Things are always changing and getting more complicated. They need to make sure people want to work for them over any other company.
Exactly. Another challenge might be managing their growth well. Growing too fast can cause problems if you don't have the right systems, processes, and infrastructure. They'll need to make sure they can handle more business and complexity without losing quality or efficiency.
It's a balancing act. They have to grow quickly to compete, but they can't grow too fast and risk overextending themselves. It's a fine line to walk. So let's bring it all back to our listener. What does this mean for someone thinking about investing in Nippon Life India or the Indian market in general?
Well, like with any investment, it's super important to do your own research. Think about your goals, how much risk you're okay with, and your overall financial situation before you make any decisions. But from what we've seen, Nippon Life India seems like a solid company with a good history, a clear plan for the future, and a commitment to doing things ethically and sustainably.
They've got impressive numbers, they're making smart moves to grow and expand what they can do, and they're all about creating value for their shareholders and the community. They're not perfect, like we talked about, but they seem to be handling those risks well.
Right. And for anyone thinking about investing in India, it's a really interesting time. India's economy is growing like crazy, and their financial markets are getting more advanced and easier for international investors to get into. There are risks, sure, like with any developing market, but there's also a lot of potential for people who do their homework and invest smartly.
It's a bit like exploring a new frontier, but with the chance of big rewards. And that's what the deep dive is all about, giving you the information and insights you need to make good choices about your money and your financial future. We've done the hard work. We looked at Nippon Life India's performance, their strategies, the risks, and their vision for the future. But your journey starts now. Take this information and use it for your own situation and investment goals.
We've given you the map and the compass. Now you get to decide where you want to go and how you want to navigate the exciting world of investing.
And on that note, we're wrapping up our deep dive into Nippon Life India Asset Management. Hope you found it helpful and interesting. Until next time, happy investing.